Nothing in life is certain, even the success of Bitcoin. A lot of people think that Bitcoin's going to instantly flip gold, and I don't think that's going to happen because there are 8 billion people on the planet that understand that gold is money. And it is, until Bitcoin came along, it's the soundest form of money.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Larry Lepard shares whether Bitcoin might reach $7 million, reveals inflation's risks, and compares gold with crypto in this video. Stay tuned to discover his insights on financial revolution now.
But the once in humanity, I know it sounds hyperbolic, but it really, I say that because, until Bitcoin came along, everything that, and we all know that money is somewhat of a collective illusion. It's what we all agree as, exchange value. I mean, this is Karl Menger's Austrian term. I mean, it's all a matter of perception. And when we perceive the dollar has value because we can go buy things with it. And, there was a time when that was shells and salt, and there've been tobacco, lots of things that we use for money, but the dollar is what we use today. And until Bitcoin came along, here's the important point. Until Bitcoin came along, every form of money, every single one before, had dilution, which is to say that its supply grew over time. So the number of monetary units grew. Now, gold was the best. It grew the smallest at 1.7% a year, but it still grew. And in 50 years, we'll have twice as much gold on the planet. It's still much better than fiat, obviously. So here comes Bitcoin, and a lot of people say a deflationary currency can't work. We can talk about that, but here comes Bitcoin with a scheduled fixed supply of 21 million. That's it. And so that's different. That's really different. And I don't think hyperbolically, I kind of compare it to there was an era pre-air flight, and then there was air flight, or there was an era pre the telegraph, and then there was the telegraph, or it's an invention. It's a type of money without any dilution. And that I submit that's an invention it's a meaningful invention, because we've had thousands of years of monetary dilution in history, and now we don't have it in this new form of money. So that's why I make this statement. I know it, to some people, I know it's hard to get your arms around it, and it sounds extreme, but it's factual. I mean, it's a form of money based on math. Nothing in life is certain. Even the success of Bitcoin is not certain. There's technological risks, there are other risks, and so. I think when you're investing, you want to construct a portfolio. And what I try to argue, I have a lot of clients who are on the older side, and I never suggest to any of them that they go heavily into Bitcoin. But I do suggest very strongly that they don't have zero Bitcoin because the upside optionality, the asymmetry, and that's basically, look, why do you and I invest in gold miners? Because we know that they have an asset which, generally speaking, the prices and the valuations are so low compared to the underlying value of the asset that if they're able to pull that asset out of the ground on some kind of reasonable terms, they're going to generate cash flows that are, multiples of what we're paying, even total market cap right now. And so that's that asymmetry, in a gold bull market, a gold miner bull market, gold stocks go up 10, 20, 50, 100x. And so that's the kind of and now don't get me wrong, some gold stocks also go to zero. I've owned them. And so, but if you select them carefully and you get a balance, and you get more that work than not work, that's the beauty of the asymmetry there. So, I think that there's, in life, I think there are room for lots of kinds of investments. About the only thing I do not recommend investing in now, even owning stocks, as overvalued as they are, there are some good stocks, particularly in the commodity space, particularly international stocks. Brazil's very cheap right now. But, the only thing I really think people just are silly or foolish to own is any kind of debt with duration. Treasury bills, 3 months, 6 months, a year, fine. You want to get your 3 or 4%, 5%, that's great. But, 10-year at 4%, no. A 30-year at, 4%, no. I think that the owners of those are going to really see substantial diminution. Their wealth is going to go down.
Prominent blockchain tracking service Whale Alert recently flagged a dormant Bitcoin address that sprang to life after almost 11 years of inactivity. The last recorded transaction took place back in 2014, just 4 years after Satoshi Nakamoto's disappearance. This wallet's massive cache of 300 BTC, currently valued at around $30 million, underscores the intriguing behavior of early adopters who held onto their coins for over a decade. A wave of ancient whale activity emerged last year, when Bitcoin's price skyrocketed to an all-time high of $109,114. Enthusiasts were amazed as addresses inactive for 7 to 10 years suddenly transferred enormous sums of BTC. These transfers did not necessarily indicate an imminent sell-off, since many of those coins never landed on cryptocurrency exchanges. Instead, some whales retained their holdings, seemingly anticipating further price growth. As new investors wait for confirmation of a U.S. strategic Bitcoin reserve, old-time whales are capitalizing on favorable conditions. Over the past week, more than 14,000 BTC that had remained dormant for nearly a decade were moved. Despite concerns about potential selling pressure, market data shows no immediate liquidation, with prices hovering around $97,440. Such moves highlight the unpredictable nature of Bitcoin's long-term holders in recent days.
Things are really coming to a head. I mean, we're in a very big fiscal mess with a debt doom loop that we're in, and the spending and the deficits. And we've already had a bunch of big prints. I mean, the book is called The Big Print, but these big prints started a while ago. There was a big one in 2008. There was another big one in 2020, and I think more are coming. And so, the pattern now is pretty well established. And I just thought, gosh, the average American is not necessarily thinking about this or aware of this. And I'd like to see people protect themselves because, as you and I both know, we're boomers. A lot of our boomer cohorts and crowd, they're all crowded into stocks thinking the stocks are going to continue to make them rich. And sadly, I don't think that's going to happen.
Right.
And so I wanted to try and issue a warning. And so, the book's kind of a warning to try and address that issue. The idea was I want to get the common man to understand, or a woman to understand, that we are in a fiscal mess, that's going to impact their lives in terms of inflation and the stock market, which is very overvalued in the future, and that if they don't have some allocation to gold and or Bitcoin, they're likely to I think experience regret in the next 10 or 15 years. And so yes, I'm arguing for those two things. Now, obviously, as you know, I've gone full crazy orange pill,
Mm-hmm.
and I think Bitcoin is a more asymmetric bet than gold, and therefore I own more Bitcoin than I own gold. I didn't start out that way, though. By the way, what's happened is Bitcoin's gone up a lot.
Mm-hmm.
But so yeah, it's a call to try to help people to understand that monetary debasement is going to hurt them, and that the two right choices to solve that problem are gold if you're more conservative and you don't want volatility, or Bitcoin if you want to be aggressive and you want more price performance. But the price performance isn't free, as you know. We've had some huge drawdowns in Bitcoin, and people have to be aware of that when they get involved in it. So.
Mm-hmm. Bitcoin has encountered net outflows of $651 million from U.S. spot exchange-traded funds since February 10, raising fears that the price could slip below the crucial $95,000 support in the near future. If this selling pressure persists for another week, the total reduction in ETF holdings might expand by an additional $1.65 billion. Despite the exodus from these funds, Bitcoin still managed to climb above $98,000 on February 14, suggesting that the market's upward momentum is not completely dependent on institutional interest. Some analysts believe part of the trading activity may have been hedged, as certain players could have acquired Bitcoin futures at the same time they were selling ETF positions. Meanwhile, companies such as Strategy, formerly MicroStrategy, Metaplanet, and KULR Technology have increased their Bitcoin reserves, and even Italy's Intesa Sanpaolo has added the cryptocurrency to its portfolio. Furthermore, addresses holding less than one Bitcoin have steadily grown in number, indicating that smaller investors have not lost confidence. A potential rally above $105,000 could be ignited by retail traders, who remain somewhat cautious. Their optimism has waned recently, as shown by net selling in wallets, holding under 0.1 BTC and a sharp decline in Google search volumes for the term Bitcoin. On the macroeconomic front, slowing U.S. retail sales and ongoing global uncertainties may steer additional capital toward Bitcoin. Although the debate surrounding a U.S. strategic Bitcoin reserve has yet to bear fruit, The sustained price level above $95,000 underlines the market's resilience under selling pressure. Investors remain watchful. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.